Hey guys, in this video, we're going to talk about the butterfly strategy. Now, this strategy is a four-legged option strategy, so it's just as many legs as an iron condor, yet unlike the iron condor where you have out of the money puts or put spread and an out of the money call spread being bought or sold to create a range or two separate ranges, with the butterfly you either have all four legs on your puts or you have all four legs on your call side. So you'll see what I mean here. So we're going to go ahead and set it up just as we would a iron condor, only we're only going to stay on the put side. Okay, so what we're going to do is I'll go ahead and Tastyworks has it pretty easy. All you have to do is just click go right here. But we can go ahead and click this. So what we did is you can see that we bought an out of the money put, we sold an out of the money put, and then we also sold that same exact out of the money put again. So whatever strike you're on for what you're selling two of them, and then you're buying an in the money put here. So whereas usually with an iron condor, you'd have the long put and the short put up here. Then you'd have the short call and the long call here. You can see that it's kind of all in one, but it's still the same thing. The shorts are still wrapped around these two long-legged option contracts here. Now, what are we looking for when we're looking for or looking to place a butterfly strategy? Well, we want the stock to stay in a certain range. But what we do when we stay on the put side and when we sell two of the same contract is that we actually create a really, really tight range. So you can see where this is green right here. Yeah, that we will still make money in here because our break evens are way out here. So if the stock stays in between 240 and 250 respectively, we will make money, but the most money we will make is if the stock expires right at 245. Now, let me go to another screen here so you can kind of visualize this. So you see how this little spike right here? So that's our max profit right here, right in the middle. And you can see the price is going to be right at 245 here to get max profit on this strategy. You can see we're still in the green here, and that's just because of where our break evens are. But we will not see max profit. So like the iron condor, it creates a range, but with the iron condor, you realize max profit basically from break even to break even here. There's no spike in the middle for your profits, whereas the butterfly, there is. So that is a long put butterfly. And if you want to do something on the call side, you do the same exact thing. So we're just going to go ahead, long call, same exact thing, guys. So you can see they're equidistant away from each strike. So each wing width is equidistant away, right? So 5, 5 right here. And you can see we sold the two short calls here. We bought the long 240, we bought the long 250, and we created a range here. Now, if we wanted to go ahead and do the opposite of this, we would create a short butterfly. And you can see that we are actually setting up the same exact thing, only we are selling the 240. We are buying two 245s, and then we are selling the 250. This gives us a credit received. And what we want the stock to do in this case is we want the stock to stay outside of our short strikes. So it's basically more or less we have a bear call spread here, and then we have a bull call spread here, and we either want the stock to go up or we want it to go down. Now, with doing this strategy, yes, you do have better odds because you're selling. You can see probably a profit 84% down here, but your max profit right now is currently only $73 with your max loss being 400 and 20, 30 bucks. They keep moving right now. But yeah, so your win rates will go up. But your risk to reward ratio will be skewed where your max profit is going to be much lower. One more thing with butterflies, we'll go back to the long put butterfly here. We mentioned that it has to be equidistant away. So what happens when we don't make these strikes equidistant away? Okay, so let's say we want to break this long put off here, this 240. We're going to break this down. Oh, 1 second here. We're going to break this down and we're going to push this to the 235. So let's see what happened. So we're going to push this 235 down here, and you can see that our green all of a sudden is no longer a range. It's more of a bullish strategy. So it's a neutral to bullish strategy here. That is because we are going further out of the money with our puts. And what we are doing is, let me go back to this. You can see that we still have that max right here at 245, but yet we are still in the green as far up as it can go. So our gains are limited after 250, but we are still in the green. Okay. Let's go back to the table, and that works both ways. So this is called a broken wing butterfly. So this is if you want to break the butterfly off, whereas if it's equidistance way, you want the stock to stay inside the guts of the butterfly or wherever your two short strikes are. You can do the same exact thing here. We can move this. We can break this wing off here, and you can see we have $10 wide between this long in the money put and our two shorts here. And then we only have 5 between our out of the money put and our two short puts here in the middle. And this would be the same exact thing, just opposite. So this would be the bearish. So again, you still have that little spike right there, boom. And then you have your green in the profits if that stock goes down. But you can see that once we pass that 240 range, then our profits are limited. So that's a butterfly strategy and a broken butterfly strategy for you guys. See if you guys can utilize that this week. And you want to do these in high implied volatility environments, especially if you are selling and trying to create the outside ranges. But these are very useful. They can come in handy. It's kind of protecting yourself on each side and still collecting a little bit of premium. Play around with where you want to play these. I know a lot of people like to break off their wings going, in the money. So they will come out here and they will push their puts in further in the money a little bit and kind of break it off. Or they will create a range, let's say up here in the calls, and then they think the stock will hit that, right? So if you have a $5 expected move in Boeing, you know what I mean? You would put your shorts right here at the 250 rather than 245, etc. So plenty of different ways to play this. And again, it's basically more or less just like an iron condor, only all 4 of your strikes are going to be in the puts, or they're all 4 going to be in your calls. All right. So that's a butterfly strategy. Okay, guys, thanks for watching. Make sure to check us out on social media. We have attached the links to our socials in the description, and we also have a swing trading service if you're interested. There's more information in the description below.